Meanwhile, Zenith Bank, one of Nigeria's top-tier banks, recently posted a 13.2% growth in headline second quarter revenue, which was in line with analysts' expectations. Now, earlier today, I caught up with Peter Amangbo, Executive Director at Zenith Bank, for his outlook on the bank's profit growth for the rest of the year, particularly in the face of lower public sector deposit inflow.
We are very proud of our Q2 results. It's very much in line with our expectation, and going forward we believe that we are set to sustain the same level of performance for 2013. Well, I'll say we have a hybrid strategy, both brick and mortar and electronic payments. We've done quite a lot in the retail space. We have our e-business. They've done very well. They are still gaining a lot of market share, and we believe that there's a lot of opportunity in e-business, cards, and other non-conventional form of banking. Retail banking is actually an area we've always taken very seriously, and we hope to do very well in this regard.
Now, the biggest story, obviously, in the financial space now is the CRR, the cash reserve requirement imposed recently by the Central Bank of Nigeria. How is Zenith Bank adjusting to that?
Well, it's a systemic thing. It affects all the banks. It affects the entire economy. I'll say, as a matter of policy, we take government deposits, but we invest all government deposits in government instruments, mainly treasury bills. With the new CRR, which we expect that 50% of those deposits will be sterilized in the central bank, we've taken other measures because we know it's going to affect the profitability of the industry. We've taken measures to ensure that we sustain our level of performance. We are focusing on retail, which we discussed earlier. We are focusing on our loan growth. We are focusing on mobilizing more deposits from the private sector. We are focusing on fee-based income, and with a combination of all this, we expect that the impact should not really be significant for 2013.
And let's go over now to the retail space. We've seen a trend in the last 5 years where more banks are pursuing making their presence more known in the retail space. Is that a strategy that Zenith Bank also has in the offing?
Well, you are aware we have subsidiaries in Gambia, we have in Sierra Leone, we have in Ghana, and we have in the UK. They've done very well. We are growing in all these countries, and we expect that we'll continue the growth trajectory. For 2013, we are not opening any further subsidiary outside the country for 2013, but it's not something we've foreclosed for the future. We will always go to where the business is, where we believe there are opportunities. So we'll continue to look, we'll continue to scan the entire globe, whether it's Africa, whether it's Europe, wherever we have opportunities where we believe that we can enhance our shareholders' value, we'll go there.
Going over to your African strategy, we know a number of banks are spreading their wings outside of Nigeria. Those who have done that already and are looking to do that even further. What's your strategy on that?
Well, from benefit of hindsight, I would say we are extremely very proud of our strategy. We are probably one of the banks that did not engage in any form of M&A. And today, we are either number one or number two, depending on the parameter you want to use. And I think that speaks for itself, whether we've done the right thing or not. Without combining with any bank at all, we have a total balance sheet size of over 3 trillion, where the second largest bank, depending on the parameter you use, or number one. So in terms of whether we've done the right thing or from benefit of hindsight, I think we are extremely very proud of what we've done. And if we were to do it again, we'll do the same thing.
Banking consolidation, where we saw a number of banks acquiring and merging with some others. Those that acquired the smaller ones now have a very good retail branch network. For the benefit of hindsight, is that something Zenith Bank wishes it had done?
Outside the financial industry, we've done very well, both from the central bank and the banks themselves. We've worked extremely very hard, and I'll say in collaboration with the CBN and all the banks in general, I think we've actually improved in terms of corporate governance, in terms of stability in the industry. And we believe that if we continue like this, Nigeria will actually be #1 in Africa in terms of the financial industry.